folks, Jim here from FX Charts, Monday the 9th of December, thanks for tuning in. Well, it was a pretty volatile session on Friday afternoon in the States after the US jobs data and non-farm payrolls. Both were a fair bit better than expected, causing equities to finish on their highs. US bond yields jumped higher as well. But by and large the US dollar was unable to take any advantage with the exception of the yen, and it finished on its lows against both the euro and the Swiss franc. And in the next few days it looks as though there could be more of the same ahead. Elsewhere on Friday the Aussie fell below 90 cents but rallied strongly to finish at 91. And over the weekend we've had the Chinese trade data. That was quite a fair bit better than expected, and has caused the Aussie to gap higher this morning. It opened at 91.40. It's come back a little bit since then, but it's still above Friday's close. So let's just go and have a look at the charts here. And on the euro, as you can see, we had a spike down in the immediate aftermath of the better data, but it wasn't able to carry on. And it's, as I say, it closed at around 137. Now it's gapped higher a little bit this morning, Monday morning. And it does look as though over the next couple of days we are going to head higher. The momentum looks reasonably positive, although the stochastics are quite overbought and the RSIs are running out of a bit of steam. I'm a little bit concerned on the top side because we have got a little bit of bearish divergence on the short-term charts. This is an hourly chart. If we have a look at the 30-minute chart, that's showing it even more pronounced. So I'm just a little bit concerned. I don't think we're really going too far in either direction today. There's not an awful lot out. In Europe, the highlight will be the Sentix investor confidence survey, and then there's really nothing out of the States to drive the dollar, apart from the fact that there's going to be some Fed board members speaking later in the day. But that's about it. So I think probably 136 3/4 to 137.50 will probably cover for the session. Dollar yen, well, the dollar, having got down to 101.60 this low down here during the Asian time zone on Friday, it bounced pretty strongly after the numbers, and it's headed higher again this morning. It's taken out 103. It's trading on its highs at the moment, 103.17. Now this previous top up here of a couple of weeks ago, that's at 103.37. And whether we go up above there today, I'm not really sure. The hourlies, as you can see, are extremely overbought, and whether it's got the legs to get up there and stay above there, I'm not so certain. But having said that, the 4-hour charts show that we eventually are going to go higher, and we're going to have a look at this 103.70 area. I'm not sure we're ready for that today. The daily charts are getting overbought. They're not hugely overbought, but they are showing signs of running out of a bit of momentum. So just be a bit wary on the top side. On the downside, as I say, I don't think we're going to much below 102.70 for the time being, and certainly I don't think we're going to see it under 102.50. Although we do have the Japanese GDP coming out today, so keep an eye on that to provide a bit of volatility. Sterling's really that's not doing an awful lot, having had a run up to 164.42 the other day. It's traded sideways between 163 and 164 since then, and I think we're going to get more of the same. The 4-hour indicators not really showing any hint of interest one way or the other, and the dailies, if anything, are showing us a bit of bearish divergence. So I'm not sure we're going to see too much on the top side. And but while at the same time, though, I don't think we're headed under 163 today, and I'd use that as a range. Dollar Swiss, well, that's trading pretty near its lows at 89.15 at the moment. Now it could come down here and test this sort of 88.90 area that we saw a couple of weeks ago. In October, actually, end of October. The daily charts are suggesting that we've got some momentum down on the downside, but the stochastics also beginning to get a little bit oversold, as the RSIs are as well, and so we might see some consolidation around here. Looking out further on the weeklies, if I just blow this up a bit, now we haven't been down to these levels for quite some time. This is back to 2011 here, so if we do go much below this this FIBO support level, which is at what, 88.68. If we go back to below there, be a little bit careful. We'll get some minor support down here around a sort of 87 a figure or so, 87.50, something like that. But below there, there's not an awful lot until we get down here towards the low 85 areas. So we could have a bit of a move ahead of us in dollar Swiss. That's for the future. As for today, though, I think with the euro looking a bit range bound, the dollar's probably going to consolidate around current levels. The Aussie, let's just blow that up. The Aussie is sitting under a bit of resistance here. If it takes this out, it'll probably head back to this 23.6 FIBO resistance, which is where the previous high came in at 91.67. And if that can get taken out, then we're heading back to this high at 92.03. Ultimately, I'm still looking at this head and shoulder neckline as providing the target on the top side. That's about 92.60. We should fail there, and then the head and shoulders can get on with its downside move with a target at 87.80. Although that looks as though it's going to be a move for early 2014. In the meantime, the 4-hour charts are heading a little bit higher. The dailies are also looking as though they're trying to form a base. So I kind of prefer to play the Aussie from the long side over the next few days. Likewise with the Kiwi. The Kiwis, well, we were watching this sort of head shoulders here, but it's fouled at the neckline. It's moved back above the neckline quite substantially now after the data on Friday, and it actually looks as though we might have a little reverse head and shoulders, which could take us back up here towards 84. The figure. The 4 hourlies do have some positive momentum. The dailies, likewise, they look as though they're trying to pick up for a bit of a run to the top side. So I prefer to trade that in the very short term from the long side. While in the longer term, I think the weeklies aren't giving us much of a hint, and possibly the Kiwi just stays in this choppy sideways consolidation, and we should be selling it sort of towards 84 and buying it back down around 82, and until we get anything different, just continue doing that. So that's about it, as I say today. There's not an awful lot out. We've got some stuff out of Asia. There's the ANZ Job Ads, the Chinese CPI, and the Japanese GDP. Then just the EU Sentix investor confidence data, and not an awful lot out of the States, which probably makes for a fairly range-bound day almost all round. So that's about it for the now. So have a very good day trading, and we'll talk to you tomorrow. Cheers.